And we had about 16 mil in the pot at that time. So we weren't nowhere big, but doing nicely. And I said, what do you have in mind? He said, $1 billion.
Hey, what's up guys, it's Nqobile Tembane here from Top Trader South Africa, and this is another installment of Market Masters, and we're actually shooting at the AMPD studios here in Newtown, Johannesburg. And yeah, today I have a very esteemed guest with me, someone who's been in the industry for probably more years than I've been on the earth. I'm sitting here with Richard Stone. How are you doing?
Very well, yourself.
Yeah, I am great. I am so excited for today's conversation. I think it's going to be amazing. We've already been talking so far. I'm already like, wow. And yeah, I know Dumelo also spoke highly of you, and I know Bongs also spoke highly of you, and they said now that you've been pushing and you know what you're doing. So I'm very excited for today's conversation.
Likewise.
Yeah.
I think there's a lot to teach the novice trader.
Oh yeah.
Particularly the guys that are starting out in the industry.
Yes, true.
You find that the brokers are there to pull in as many traders as possible.
Yeah.
But nobody's really concerned about getting successful traders.
Mm-hmm.
If you look at the turnover in a broking house, you're talking roughly 5,000 people per month.
Mm-hmm.
Okay, and then they will have most probably anything up to 25, 40,000 people on their books. So when you look at the amount of money everybody's going to put in, $100, $1,000, $3,000, and you take that at 4,500 people turnover per month. That is a lot of money.
Yeah.
Okay.
So
get
true.
the pip spread.
Yeah.
Okay. So they remember one thing, Nqobile, is the brokers are there to make money. Okay,
so true.
They there to make money, and if you're not on top of it. When I got to London, I met with a very big broking house.
Okay.
And the CEO called me in and he said to me, "Welcome to London." He said, "What are you doing here?"
Yeah.
I said, "I've come to learn."
Yeah.
He said, "Well, lesson number one is just remember you're a very, very small fish with very, very big sharks. So if you're not fast and nimble, you will get eaten up."
Yeah.
Okay, and that is why I also changed my trading strategy after getting back into it, to see the market for what it is, not anticipation, not what the gurus say or the analysts or economists or that kind of stuff. Look at the market, see what it's doing, and do what it's telling you it's doing now for the next hour or two. Be in the market. Okay. Talking about, we spoke earlier about resistance levels and all that kind of stuff. And a friend of mine that I trained some time ago, he's moved away from my style of trading. He found resistance levels. And then about a week ago, when gold was in such a turmoil, okay, and in the morning he said to me, there's a level at 1652, gold's going up. What happened? 100, 200 pips down. Yeah, because you just cracked the level.
Yeah.
You see, so for us small fish in the market, you've got to be on top of the market. You've got to understand the movement of the market, and it's all short-term trades.
Yeah. Yeah, actually, that was actually something that when we were speaking, I remember a couple of months back, you were saying that your trades now, you're focusing on shorter term trades.
Yeah.
Yeah, and why is that? Is it because we're small fish, or is there another reason to that?
No, I think it's just being careful and applying your knowledge with wisdom.
Okay.
Okay, because you can look at any indicator on the charts, and they say, but the long term is this or that. Okay, and you start a long-term trade with minus 400. Okay, so the overall indicator will indicate we're going long.
Yeah.
and you go long, and there's a pullback. The indicator's there. So you just drop in like 200, 300, 400 pips, and you think, oh my word, what now? By that time, your margin's up. Okay, so it's about being in the now, and the plan that I've created is getting into the market, and I look at 2 to 3 20-pip trades per day. And my plan is to take that, and you take $100, and I've worked out a ratio of the amount of lots you must apply, and that changes on a daily basis. And in in other words, 30 trading days, 6 weeks, you can trade $100 to $10,000.
Okay.
By doing 1 20-pip trade per day.
Okay.
That's it. So if you do 2, you finish up in 15 days. If you can do 3 a day, you finish up in 10 days.
Okay.
You know, and there's nothing in the market where you can actually take a substantially low amount of money and generate it much higher.
Yeah, but my understanding is this is a challenge that you're setting out for yourself. Right? Yeah.
And to teach people that, because people work on a spreadsheet. You know, I've also got a big fancy spreadsheet, and you put in your amount of money, capital you're going to put in. You look at your exposure, be it 2%, 5%. It'll say, okay, you're trading so many lots, and that's what you trade per day. Okay, sometimes you have a bigger run or not, but what I find interesting is by doing it this way, you have the control of having a target in the market, because most guys get into the market and they don't know when to come out. Okay?
Yeah, that is true.
And then when you're starting out, your 2 emotions, fear and greed. So when you're starting out, you're too scared to take the trade. Okay? Must I? Is it ready? Okay, here we go. Okay, now I'm going. Nice. 10, 15, 20 pips. Is it going to go further? Maybe, maybe not. So from a psychological point of view, you've got to protect, I call it the grey matter, because anything to do with trading, okay, 80% is psychology, 20% is know-how. If you cannot manage your emotion and your psychological approach to the market, you will not be a success. You will not do it. Okay, I've seen that over and over. So, you know, that's typically what we spoke about now, why I've designed a simple method, you know, which you can see on the screen, and having the arrow system in place. And every arrow system, every arrow appearance has got the potential for 20 pips.
Okay.
So when I take a trade, I let it run. It's either going to give me 20 pips or 0. So I've got a no-risk trade.
Okay.
So if I don't make my 20 and I get nervous, I'll get out at 15, I'll bank something. Or if it looks good and it does pull me back to 0, I've lost nothing. Okay, so that's the approach to the market, how I'm doing it. And I mean, after all of these years, when I've been in the business now at 20 odd, run about, and I still have my challenges. Every day I still have my challenges, eh? You know, it's every day you start out, you don't know what's really happening out there. And the big thing with the markets that the novice traders must understand is the broking houses. Okay.
True, so true.
Your broking houses is, you've got primary brokers and then you've got market makers.
Okay.
These are guys that are getting their feed in from the top 11 forex currency providers, the likes of UBS Bank, Barclays, Royal Bank of Scotland, Morgan Chase. You know, those are the big boys, and they will get their feed into their trading station, and they will filter it so that you get the best price possible at any time. However, you might hit a trade, okay, And that specific trade, you're trading against Barclays.
Okay.
You're not trading against the broker.
Yeah.
And what the brokers do, they obviously get a kickback from the banks, but they've got their pip spreads.
Oh, yeah.
That is a proper primary broker.
Okay, when a book broker basically
Yeah.
going directly to the liquidity provider.
To the liquidity providers.
Okay.
Your normal market maker, okay, will have a normal B book situation.
Okay.
I had a very interesting scenario a little while ago with two different brokers, okay, and I was actually trading both of them, the one on the top screen, one on the bottom screen, okay, and the guy with the proper liquidity providing on a trade was outrunning the other guy by 12 pips.
Sure.
So the guy with the B book was actually holding on to his position, and the market was up there already. And later on, it'll catch up, you know. And then we actually had a joke, and the one guy said, "Well, if that's the case, then you if the one is running, then you just buy the other one." You know? So,
Actually, yeah.
So I said, "No, that will just mess with my head."
Yeah,
you know?
yeah. So,
But but for the new guys, they've got to understand the brokerage. You know, I've had multiple experiences, most probably 20 brokers in my life. So I know all the big boys in London. Okay, I mean, one of the biggest guys there when I was trading a specific position, we had $1 million in there. Okay, and I went with 100 lots.
Okay.
Okay, and I put my deal in. And I thought, what's happening here? And they only honored 23% of my position.
Okay.
Okay, and the balance was on hold on the position. So in other words, when the market gets back there, if it's going long or short, you're in the market.
Okay.
Okay.
Yeah.
Which is highly dangerous because this trade actually made money.
Oh, yeah.
Now the market's turning down, but
Sure.
it's going to put you into a buy trade.
Yeah.
Okay, and that's how they catch a lot of guys out.
Okay.
Okay, you'll find that your B-book brokers will many times, if you're trading a big amount of lots, if I'm talking anything, I'd say about 50 to 100, when you hit the button, a little screen will come up, okay, and say your position is being assessed. Oh. And the chief trader then will say, okay, we're accepting your position. Oh, wow. Or we're not accepting your position. Yeah. So that's why it's so important to work with a primary broker, because they've got the direct liquidity from the banks, and those kind of brokers, you must be able to place a trade of 100 lots without them blinking an eye.
Yeah, no, that's true.
Okay.
What I'm aware of when it actually comes to the kind of situations we're actually talking about on the podcast yesterday is that essentially with account sizes, if you're going to fund maybe like 10,000 US, the broker will take, even if they're a B-book broker, but when they see that kind of money coming in, they'll probably take you directly to a liquidity provider because they know you're going to place a very large trade there and they can't take on that risk. Yeah. So I know some brokers have A and a B book in the house. So depending on your account deposits or depending if you're a profitable trader, they'll decide, hey, look, this one deserves to be on an A book, B book. And how do you feel about that? Is that good business or?
No, it's manipulation. Okay. It's being dishonest. Yeah. Most of the time you'll find that the broker with them coming, even you go put in 10 grand or 100 grand, okay? You come into the marketplace, and remember that broker, when you fill in the form for application of your account, they ask you how many years experience have you had in Forex, in options, in all this stuff, okay? And then they ask you, what size lots do you place and how often?
So true.
Okay, so they know exactly, are you average, are you a beginner, or are you top? If you're a top guy, they're going to take you to the A book immediately. Okay, if you in between, you will go to the B book, and like the one broker said to me in London the one day we were talking, he says, for the guys that come in like 3 grand, that kind of stuff. We will let them win the first trade. Then the second trade he'll break even, and the third trade we take his money. That came from a broker. I mean, and a
That's
big
crazy.
one,
That's
you know.
crazy.
I think my best experience was with UBS in Switzerland, and secondly was with Old Mutual.
Oh,
Yeah,
okay.
Old
okay.
Mutual's got a head office, a trading floor on the Thames River. They've got 3 floors of 200 traders.
Oh, wow.
Yeah, so there's 600 guys, and we were in a pub one night, and my son and I were talking Afrikaans, and this guy came up to us and introduced himself, and he was the head trader on the platform.
Yeah.
So I said, can I come and learn?
Yeah.
And it's amazing when you ask people, can I come and learn, how acceptable they are, how easily they say, listen, come have a look what we're doing. So that month, that was April 2004,
Okay.
Old Mutual did 118% for the month.
Yeah.
Yep.
That is amazing.
Yeah,
That-
so-
and I think a lot of people might not understand that how crazy, because like the issue is right now is that everyone wants to make like 1,000%, 2,000%, 10,000%,
Yeah.
and people actually look down on these like big percent, on these like small percentages like 30%, 60%. Those are big numbers right there.
Big numbers.
Very big
Yeah.
numbers. Wow.
And I think that the big thing with the trading, which a trader must visualize in his head, it is one industry where you can make 100% a month.
Yeah.
For
so
sure.
true.
But you must have a specific plan on what you're going to do, how much are you going to expose, and get to your target. And once you've hit your target for the day, you're done. Okay.
Yeah.
Because if you go back into the market will take it back from you.
So
And then you've got to fight back again to get back there again. So my motto is, I wake up in the morning, my time slot is between 7 and 9:30. Between 7 and 9:30, I must get my 2 times 20 pips. If I'm lucky, a third one, then we're done.
Yeah.
You know, on Monday I had a very nice run. I picked up a late afternoon run, 4:30, 5.
Okay.
No, and it just did 160 pips.
Oh wow.
Okay.
Yeah.
So you do get the cherries on top, but that's not my style of trading. You know, when you have a look at what happened in the market here this morning, just before I left home, we had that long going up there, okay, and that was over 20,
Okay.
okay, and there was a short, and I mean this short you can see down here was probably 60.
Yeah.
You know, if we go and have a look at the, just to give you an idea there, what have we got there? 20-ish, eh?
Yeah, almost 20.
Yeah, 20. And if we look at this one down here, it is a nice big one.
Yeah, it is actually going 58.
Yeah.
It's about 60.
60 odd.
Yeah,
eh?
yeah.
So just that little bit. Sometimes I get a bit of a runner and I pick up 30,
Okay.
and then we call it a day.
Yeah.
Okay. And you can see here there was another 20 on that mark. Okay, and that's why it's so important, because you hit the 20 and then it can break back again.
Okay.
Okay, but I mean, if I did it there, I did my 20, and then on this push up here was another wrestling and sweating and that kind of stuff. And you know, when we are going to have a look at the longer term stuff, I've set up charts on a 4-hour chart, exactly with the same, and then using these little arrows on the long term on the martingale system.
Okay.
Okay, so if you go in, say, with one lot and it's still moving and you pick up one of those arrows, okay, then you can maybe expose an extra 50%. So by the time this whole run has actually escalated and gone down, you've added another 10 positions within a period of 2 to 3 days.
Oh, okay.
And then you use the martingale system to build up. And, you know, so where you normally say would do 100 pips at one lot, now you've ended up doing 100 pips at 3 lots. You know, that compounding effect of the market, yeah.
Yeah, sure.
So just trying to keep it simple.
Yeah.
You can see there that yellow arrow's coming now.
Yeah, I see it.
Okay. It's coming in there, and we'll see where it ends up just now.
Okay. No.
Okay.
Beautiful.
So every time there is a possible trade that you go in, take your 20, walk away.
Mm.
And if it looks like it's battling, cut the deal.
Mm.
Get out of it.
What I understood right now, okay, you said something earlier on, you keep talking about London, you keep talking about, you spoke about London actually, you keep talking about London. But what I want to know is time before London, like what was that like? Because were you already a trader when you went to London, or what's the situation? Because I just want to give the viewers a bit of background.
Okay. Yes. Yeah, let's start at the beginning.
Yes.
In 2000, a friend of mine was very involved with multi-level marketing and stuff. And we did this and that. And the one day he called me and said, Rich, you must see this. I said, what is it? He said, trading. I said, no, man. He said, please, just come along. So I'll buy you a steak and a beer afterwards. I said, no, fine, let's go. So that was just when trading came to South Africa. And we went there. And when I looked at the charts, the first thing that caught me is I can trade up and down. It's not stock market. Yeah. Okay? Yeah. CFDs followed after that and options and so on. I thought, no, this I can do. Yeah. I'm happy with that. So we got involved with this crowd. Again, the lack of experience and knowledge and setting up our charts to trade properly. At that time, the fastest internet we could get was a dish, and I think it was on 126.
126. It's on kilobytes.
Kilobytes. That was our fastest. And I was trading with fairly big money then. And then the one Friday afternoon, I did a trade, and there was a cut in the internet. By the time we restored it, I'd lost 17,000 rand. Sure. And that was it. Yeah. Finished. Yeah. So from there, I packed up and I left for London. And that was quite a tough start there. Okay. To find people to teach you, properly teach you. So I made a list of all the top brokers, and I went to visit them and learned from them, but nobody could show me stuff like this. Okay, it was the normal moving average thing. You've got your 5, your 8, your 21, your 50, your 100. And there's nothing wrong with that. Okay. But the market conditions have changed so substantially since then. Yeah. We spoke earlier on, like from 2.4 to 6.3 trillion a day.
You were trading back then.
Money.
Yeah, it's
those days the market was very consistent. Okay. Now there's so much money, so there's more manipulation. Then I settled down in London and basically lived between Switzerland and London, and that's how I got to do with the UBS guys there. I worked with a couple of very big brokers. One of the biggest broking houses in the world is in Geneva. Okay. A really smart outfit. These guys are top. They must be in the top 3 in the world. Okay, proper primary brokers, excellent service, all that. So I learned a hell of a lot from them. They had an accounts manager that was really, really sharp. And then we started working on moving towards a hedge fund situation. Okay. And I ended up back in Canary Wharf in London, where I had offices. And we started a training seminar scenario and also set up the hedge fund, which we set up on the back of a big hedge fund in Cyprus. And we didn't do big. We weren't into big volume. And we were doing pretty good. We were doing our, I'd say, 8 to 12% a month, consistently, nicely. And, some months we drop. I think our worst was 2 months in the year. We were actually like on -5. And then, built it up in the next month and so on. And that went very, very well. But also, that also attracted attention, because through the hedge fund in Cyprus, these results get published.
Oh,
Yeah.
okay.
And then on a day, a guy walked in. He said, "Look, I'm sorry, I don't have an appointment. I'm in town. Can I have a cup of coffee?" I said, "Yeah, sure." We sat down. He took all my stats and he looked. He said, "Look, we've been watching you now for about 2 years.
Sure.
And what you're doing, we like what you're doing. It's not over the top. It's nice and easy. The drawdowns aren't big. Can we do some business?" I said, "Yeah, geez, of course. It'll be nice." And we had about 16 mil in the pot at that time. So we weren't nowhere big, you know.
Okay.
But doing nicely. And I said, "What do you have in mind?" He said, $1 billion.
Wow.
Yeah.
Sure.
And I just smiled at him. I said, "I'm out. I'm not taking this one on."
What?
Yeah, it's just your spread between the brokers,
Yeah.
and to keep that consistency going, okay, is just out of the question.
But doesn't that seem like an opportunity of a lifetime?
Yeah, I never wanted to go real big, you know, because when you get into the Goldman Sachs kind of scenario, okay, you lose the personal touch, you know. Then you start getting into a trading floor. You've got other traders that you've got to watch. It's your responsibility. All of that was my responsibility because I pressed the button. And we kept that going, and then eventually we got to a point, and I sold off the hedge fund. And because my first grandchild was being born, and I thought, you know what, I've had enough of it. I think what was the worst scenario, having something like that, is the regulators. Okay, London is most probably the most fierce regulators in the world, and they would anytime. You can't say they're coming to see you every month, every 6 weeks, or every. One morning you get to the front door. There's 4 or 5 guys, nice black suits, all the stuff, and they say, "It's your turn today, Mr. Stone." Okay, there go. There's the CFO, compliance, can talk to the guys, you know, and then they will scrutinize the transactions, and then there's like £1.43 difference on a transaction. You know, petty cash stuff. You've got no idea what these guys did. You know, and then you've got to pay for a full audit, and you've got to prove to them that you weren't wrong.
Oh, sure.
Yeah, and I think that whole corporate thing. I mean, Canary Wharf is beautiful. I don't know if you've been there.
No, I haven't been there yet.
When you walk there, you smell money. It is crazy. I mean, the HSBC building cost them £1 billion to put up. I mean, I didn't have a big office space. Most probably, 200, 250 squares. And rental there, that office space cost me £28,000 a month.
£28,000.
Pounds, yeah.
Sure.
So when you're moving in those circles, it's phenomenal, you know, because you're moving with successful people. You know, the cars that drive there. I mean, was it Lieberman Brothers? That one, they were just around the corner from us, and they were big. And they made a mistake in 2008, and it cost them the whole company. Sure. And that was the stuff that put me off this other guy's offer. Because if I went with that, then I get pulled into the corporate hedge fund world, and I didn't want to be there, you know, because then you become another Goldman Sachs. Okay. Yeah. It'll just escalate, because I mean, if that guy's got $1 billion to put in, can you imagine how much more money he's got? Yeah. And his friends. Yeah. Okay. Then eventually it becomes top heavy, you know, and you lose that special part, which is trading. Then you're running a conglomerate, you know, and I didn't want to be there. So then I moved back to Switzerland, and then my first grandchild was born, and then I decided, okay, I've had enough now, semi-retire, I came back to South Africa about 6-7 years ago. And then with a friend of mine, he actually asked me to come help him, got into corrosion control, specialized corrosion control. Okay. And we got an idea from America where you take sandblasting, the sand, and you put it into mattress foam. Okay, into the chemicals of mattress foam. Okay. And then when you do the sandblasting, there's no dust.
Oh, wow.
Yeah.
Wow.
Yeah. So I did a bit of that, and then we came into COVID, and we could do nothing. We were sitting at home, and that's when my wife said to me, "Look, why don't you have a look at it again?"
Yeah.
I didn't open it.
So you had left it completely.
I shut down completely.
Sure.
Yeah. So I contacted my brokers in Dubai that I worked with, and had a chat with them, and they acknowledged. They said, "Look, things have changed dramatically." So we took it from there. I started out, and first on the demo, of course, but very difficult because the market was just not consistent.
But like, I want to ask something because like you have so much experience of trading at this point, and now I hear that you say you started off on a demo again.
Yeah.
Yeah. Was that weird for you? Was that like a very different experience, or did you feel like that was needed for you?
When I started, the reason I did that was because I know the CEO of this Arab company, the brokers, because he came to see me in Geneva, and we met up in London once. So I called him and we had a chat, and he said, "Look, go back and assess the market and see."
Okay.
Go and because it's not what it was when you and I met up. And it wasn't, Yeah. I mean, if you can pull back charts as far back as 2010, and you have a look at gold charts, then gold would come in and it'll like nicely just go down and turn and nicely go up. Now comes in and goes up, down, up, down, up, down. Yeah. And I'm glad I did it because it took me about a month to settle down and say, okay, fine. And from there, I started dipping my toe back in the water. And it was a good experience, and even after all the years, I still, when you press that button, you it's like that.
Yeah.
So, yeah. But it's been a good ride, and I think everything that I've learned back again over the past 2 years, I'm ready to implement into this new year. Okay. And I was very excited to hear what you talked about, the mentoring. And to me, to do training, I make my money from trading. Okay. Yes. But I'm prepared to share my knowledge. Obviously, the guys must pay for my time. Yeah. But I want to help guys to understand the market properly, to trade successfully, and how to apply their mind to the trading. Okay, when you look at a trader coming to the market every day, his first emotion is, "I'm scared I'm going to lose my money." Okay, wrong approach. I guarantee you, he's going to lose his money. Guaranteed.
So true. So true.
Yeah. Come to the market and say, "I've got an opportunity to make money today."
And then obviously...
And wait for the opportunity, because is one that has got the discipline to wait for the right moment, and the other one just wants to be in the market.
Yeah, so true.
Okay, so they get trigger happy. It looks like a good opportunity. It's not confirmed, and in they go. And then eventually the trade might come out for them. But they go and sit through a -20 or a -30. Yeah. And that's not nice. Okay. So, taking traders and working with them, getting them mentally, and that they understand the ins and outs of the market. Okay. And, to me, trading is not a game. Yeah. It's a business. Yeah, that's so true. Okay. It's not gambling. Okay, if you want to gamble, go to Caesars and
Yeah.
chuck your money on the table, see how it goes.
Go play some slots there.
Exactly.
Yeah.
Whereas if you come with a proper approach to the market on a daily basis, and you've got indicators that can cover you, that you can trust, okay? Because that's one of the things that I've found with a lot of indicators that have come in, all right? There's certain indicators come in and the volume goes against them and they're gone. And you think, now, what's happening, okay? Yeah. Indicators must come in and you must work with them, okay? Something similar to what we're watching here now. Just have a look. See, we had that one come down.
Yeah.
Okay.
Oh, I see, actually.
All right.
I see.
So we had it come down. Let's see if we made our 20 there. Okay. See, it didn't?
Yeah, it's about 10.
Okay.
Right?
So if it doesn't go to 20, the stop loss is on 0.
Oh, yeah, it's break even. Oh,
so,
I see.
So there's a 0.
Yeah.
Okay. That one gave its 20, this one missed it.
Okay.
There it came in again. But you see this arrow here actually showed that the market is still long.
Okay.
All right.
Yeah.
So by trading that one there, we should have rather waited for another entry long. But if you apply the entry point at the 0 level, so you're going to push for 20, okay, and if it doesn't make it, you can either then say take 8 or 5 or whatever, because you see it's not going down there, but on 0 you're out.
Yeah.
Okay.
Yeah. So what are these arrows based on? I think that's my question. Is there a specific strategy that they're based on, or specific confirmations?
Yeah, they're confirmations.
Yeah, but based confirmations of what?
They-
Price
they-
action or?
Yeah, some of them are price action, and some like these small arrows here are purely volume indicators.
Of volume indicators, okay.
So it's important when you get your trigger there that you have a volume indicator trading away from the market.
Okay.
Okay, because that one says that, but is it really there or is it going to be turning? You can see that one too. Immediately I had red arrows and she pushed down. Okay, and then that purple is a moving arrow. Okay. But as soon as the purple comes in, you know it's reached saturation point of that specific move. Okay. So you can start looking and say, okay, fine, this is not pushing further. I can stop, or I can wait and see if it's going to push further, or I'm going to come out at 0.
Okay.
Okay.
Yeah.
So you have a very specific trading methodology, and most of the arrows revert back to the moving averages crossing. Some arrows have got stochastic and RSIs in, okay? And you'll see I don't have any oscillators at the top. I only trade with indicators. Okay. Because oscillators are lagging indicators. When you look back, you say, wow, it's a lovely picture.
Yeah,
okay?
so true.
And I actually looked at one yesterday. It came in. I thought, but the market's turned. Why is it not in? 4 bars afterwards, the market was 15, 20 pips up already. Chooks, here it goes green. So, okay, so when you look at it in retrospect, it looked like it read the market spot on, and it's not.
Oh, okay.
I see. I don't work with RSI. I don't work with stochastics, with MACDs, any of those things, because they're all lagging. And when you're looking at your RSI and stochastics, a lot of traders work on the overbought, oversold scenario. So when it cracks in a long, cracks to 80%, okay, it should be coming down now, eh? Yeah. And it can lie in that 80 to 100% range, and the market can still run another 100 pips.
Yeah, that's
okay.
So true.
So it's where what I'm working with here is what's happening in the market now, and it's more definite. And it's not based on oversold, overbought. Because oversold, cool, it's oversold. But when is it oversold? It can only be in 2 hours' time. Okay. Yeah. You need something that crosses and you know I've got a chance. Okay. And you go in and you do it. Yeah. And that's it. Yeah. Okay.
Yeah, that's great. Yeah. It seems like you've got a really nice piece of software over here. My question is, if people were to come to you and say they want this, is it something that you're willing to give to people paying for it, rather than put it like that?
Yeah, look, my idea is, if there are people that are interested in this way of trading, then I will train them. We'll work together. If they don't have knowledge of MT4 and setting up the stuff and how to trade, that's all in that package. I'll set their charts up with all of these indicators for them. I don't need to pay for that. I pay for the training and my time. I'll help them with that. And then something very interesting cropped up in the past 2 weeks, because I'm mentoring 2 guys now. Okay? They've got exactly the same indicators, and they're also exactly on the same broker. MT4, everything. And then in the morning, 7 o'clock, we go onto a WhatsApp chat. Okay? Can you see that arrow, for argument's sake, that white arrow? Okay? You see the white arrow coming down? And one guy will say, I don't have a white arrow. I check his settings. Settings are the same, the whole thing.
And that time frame.
And certain arrows trade differently on a different computer, even if it's with the same broker. So that is a very, very dangerous scenario. Okay? And what's good is, when we work with the guys in the first month, I will check that stuff. Because I know the market movement, I know how these arrows work, and if mine come in and yours is not in, then something's wrong. Okay? Then we've got to take your settings on your arrow and maybe tighten them just a little bit. Okay? So, if you've got to say a 364, then we'll make it a 253 for your arrow to come in correctly. We tweak it. I've got a pot of about 6,000 indicators. Okay, and I've worked through every single one of them. I can put an indicator on the chart, and I'll tell you exactly what it will do and how it works.
That's that experience. That's 20 odd years experience right there.
It's been a good time, but I'm actually now only starting to enjoy what I'm doing.
Oh wow. Yeah, but when you're talking about enjoying what you're doing, I know when we spoke, you spoke about a time when you were trading with 16 screens. What was that? What is that process like? What exactly are you looking at when you're trading with 16 screens?
You've got, for argument's sake, the first and foremost thing those days was Bloomberg. So one of the screens in the corner would be Bloomberg. Below that would be, I use forex.com for my calendar news. So I'll have my calendar news up, and I'll have that also pinging to my computer. So when it gets into 2 o'clock, it will say non-farms at 2:30. Then okay, coming up. Just before non-farms, it'll ping me again. So I never place a trade half an hour before any big announcement. Preferably, I stay out of it. Okay. Specializing in gold, I prefer to stay away from announcements, because your pound and euro combinations have an even break. When the announcement comes out, it goes in a direction. Whereas gold comes in and it will first spike down like 120, and in the same breath it'll just come back straight up and make as if nothing's happened. Okay, so it first does the opposite, whacks you out there, and then it goes the other side. So I prefer just to stay away.
I do understand there's a lot of stress that comes with that.
And then Nqobile, what's important to me is the trading times. Okay? Particularly if you're going to be working with gold, around about 7 South African time, up to 9:30. You must have your deals done by then. After 9:30, the momentum starts slowing, and you start finding yourself in sideways trades. The straddles and stuff start happening. Something similar to this. It wants to go, but it's not going. Okay. So that time frame, if you're trading the euro and the pound, you can check every morning, 9 o'clock SA time. You'll get an entry point, and that entry point will be worth 20, 25 pips. On the dot. Boom. Afternoon, 4 o'clock. On the dot. Okay, for those two. They don't trade bad in the morning. I just find them very lethargic and boring, and that's why I do gold. It's much higher risk, but because of the indicator setup I've got, you stay out of the market safely, but when it happens fast.
Okay.
Whereas you can get into the pound and sit there for 2-3 hours for 20 pips.
Yeah.
The gold does 20 pips in like 15 minutes.
Yeah.
So it's like boom, very fast.
That is so true.
Yeah.
Yeah. Sure. Wow.
So,
Yeah. No,
so the time frames are very important.
Yeah.
Guys must understand the Asia market is very slow. Mm-hmm. Okay, you can make some money there, but you want to work with the market when it's moving. Okay, it's like having a Ferrari and you put a 10 octane petrol in it. You know, it's not going to go far. Okay.
Yeah.
And the same with gold. You've got to work it in the time frames. And you know, if you're going to have a look at this morning, there was that 7:30 push. Next one, push, done.
Done.
Yeah. Yeah. So you know, if I'm not convinced for a third trade, I stick with two. Because if I do 2 20-pip trades a day, I finish my cycle in 15 days, 15 trading days. So it's in 3 weeks.
Yeah.
And since I've been doing that, it's just become so bloody simple, you know, really, really simple.
Yeah.
And I think, you know, once traders understand that concept, where you must go and take a little chunk, okay, and put it in the bucket. Tomorrow you put another chunk, and by the end of the month, the bucket's full. Yeah. No, it's not about the big runs. It's not about you going for a 6 every time you're on the cricket field.
Yeah,
okay. The ones and twos also win the game. That's very, very important.
Yeah, that's true. I mean, you've had 20 odd years experience. I just want to ask, like, what have been some of the highlights of your career, like your trading career to date? I know I'm asking, you've probably had a lot, but like, what are those ones that like stand out for you, where they were such defining moments for you?
I think the most exciting one for me was, it was a Friday evening, because look, in London I traded maximum 12, 15 pips. Okay? And I do one trade a day, and that was it. Okay, my personal account I was a bit more risky with. I traded $150,000 to 4.8 million in a year and a half.
Wow.
Okay, but that one worked well. But what I did there, and then one Friday evening, I think it was the euro. I got into a trade, and it just kept moving. And I watched it, and I thought, this is strange, and not fast, eh? It was like going 4-5, but no pullback. 4-5, and I eventually got my stop loss 3 pips behind.
Okay.
So as it goes up 5, I move up 2 or 3.
Okay.
So, and it actually went like that till just before closing time. 100 pips.
Wow.
That was that. I think that was more luck than wisdom. That was more luck than wisdom. And then I think the day we kicked off the hedge fund, that was pretty exciting.
Okay.
Yeah, that was pretty exciting, getting into that world, because I was working with 8 traders, and I had a microphone on my desk, and they were all over. I had folks in Canada, Croatia, wherever, and we check in the morning, and everything is ready. I say, okay, fine, we're looking at the euro now. The euro should do that and that. If I say buy, you guys buy. Okay, and so that's how I split up the 16 million, so that I didn't need to press the button on everything, because then we've got a whole lot of smaller positions, but in the main account. Okay, we had like sub accounts, and that worked pretty well. That didn't go down bad at all. But I forgot to mention to you about what I'm busy with here.
Okay, yeah.
If we do what we want to do, and let's say we do 120 a day, and in 6 weeks we've got $10,000. Okay. Most brokerages, particularly the guys that allow copy trading, okay, legalized copy trading now, by South African standards, you can then go and open up 10 accounts under your main account, like that. So your next 6-week cycle, that you take the $100, you put $100 in each one of them, okay, is 10 times 10,000.
Yeah.
So your next cycle is 100,000, okay, and then you go and you open up 100 accounts, which will allow you.
Yeah.
Okay.
Okay.
You just stack them under each other. They're all linked up to your one account. You trade your one account as if that's it. You do your 120 pip per day, and your next cycle will give you $1 million.
Sure.
Okay.
That is quite
and that's my target for the new year.
Yeah, okay.
By June, July, I want to be there.
Well, we'll have to sit down again next year again to find out what happened.
No, by that time we'll have a nice track record too. We can show the guys. Check this out.
Yeah, 100%.
But that's what I want to teach the people.
Okay.
It's not difficult. Okay, it's really not difficult. It's the greed factor. Because people want to push. The nicest thing is to do 100 pip run. I did one the other day. It's like the exhilaration is like crazy, and then it looks like it's actually going to go further, and then you've got to decide. I'm going for my 100.
Yeah.
Take profit. There you go.
Yeah.
You know, the one I did hit 100 and ended up at 170. That's fine.
Yeah.
Okay.
It happens.
It happens, but this way is precise. It is easy. And it keeps the grey matter together. You cannot, because as soon as this slips, you're gone. You will lose money. Because then I mean, like now, in this situation here, most probably would have been back on zero already.
Okay.
Then we're out.
Okay.
You see,
Yeah.
because if you're sitting there and this thing is just going sideways like that, it'll drive you crazy.
Yeah.
Okay.
That is it.
Because now from here it can go anywhere. But that philosophy, you get in, you're going for a target, you miss it, zero. No loss. Okay, so you don't sit through trades, you don't wait and hope and pray. Like the one guy said to me, I was praying when I was in the trade. I said, no, you must pray before you trade, so you've got the wisdom to trade correctly.
Okay. Yeah, because there's one person praying that it goes up this side, there's another one praying that it goes
it's not going to work, eh? That's for sure.
Yeah.
That's for sure.
Okay, so on the rather like negative highlight side, like what has been like your biggest loss, and not in monetary value, but rather in a sense of like where you lost either a trade, like where you felt like you were not supposed to lose that trade, but you lost and you felt like you lost way much more than just money.
Yeah. Now that happened in London more. Okay, I manage my stuff much better now.
Okay.
When I really started in the trading industry there, I had I think it was £5,000, and it went pretty well. You know, it went well, and I think I started getting cocky. Okay, firstly overexposure. Okay, I broke the 3-5% rule.
Okay, what is a 3-5% rule?
Okay, normally when you talk about investment or working in investment, they suggest that you work 3%, maximum 5%. The reason they say that is that allows you to trade multiple trades. Okay, the normal exposure for an account is roughly 20%. So if you've got say 3% in, you can trade 7 different deals and still be well within your margin capability. Okay, because I was finding my feet so quickly, I pushed that up to 30 on one instrument.
Sure.
Okay, so you just need 3-4 bad deals, and then the account is wiped.
Yeah.
Okay, then you've got to get up again and go. I've had 3 cases in my startup where I had accounts wiped, you know, and every trader, I want traders to be winners, but every trader should experience that. Okay, because you just see it slipping away, you're praying, you're hoping it's going to turn, it's not turning, it's just going and going and going. And in a case like that, if you see, look, my normal stop loss is 20 or 30, and I'm already on 50. Why are you still in the deal?
get out.
Yeah, leave.
You've broken the first rule, stop. Then at least you've got some capital protected. Okay, but the psychology there is somewhere you actually tell yourself, this thing's going to turn. And the market does what it wants.
100%.
You cannot tell it what to do. Okay, if it decides to run
Yeah.
and you're in the wrong direction, you're going to get a hiding.
So true.
Yeah.
Yeah.
So it's very, I think it's important that guys just approach the market as a business. That's the important thing.
Yeah.
So
What's the biggest lesson you? Because I hear you say there's 3 times where you lost all your money in your accounts. So what are the lessons you took from those experiences?
You work with a stop loss,
Okay.
and that's it.
Simple as that.
Simple as that.
Yeah.
When you place a trade, you put in a stop loss. So when I place a trade here, stop loss is 10. As soon as that market moves away from 0, normally 4, 5, 6, okay, I immediately put my stop loss on 0.
Okay.
Okay, so initially you could have a bit of a fluctuation, bit of a drawback. As soon as it moves into profit, it's on 0. Yeah. That's it.
Yeah.
That's the deal.
Okay.
And I think that's where a lot of newbies get hurt, because they put in, they don't know how to work out their risk reward ratio. They put in their stop loss either too tight or too far away. Okay, most of the time it's too tight because I thinking I don't want to lose more money.
Yeah, that's
Okay.
so true. And that time they reward on the reward side, it's like it's unrealistic, but at the same time the
Exactly.
risk is too small for the reward that
Yeah.
they want. Because
Yeah.
I'm hearing right now your risk reward ratio is 1 to 2. Is that correct?
Yeah, 1
Yeah.
to 2.
Okay.
Yeah, and so that you at least know that's what I'm in for. Worst case scenario, I'm going to get whacked for that.
Yeah.
Okay, because you find a lot of guys will go in. Let's say they got a 20 pip stop, and the thing comes and it's actually getting really close, and they move it to 25
Yeah.
or to 30, and here it comes, and they move it to 40, and all of a sudden it's just a bloodbath.
Yeah, it is.
Okay.
It's a serious one.
Your first loss is always your best loss, every single time. You make up your mind, and the big thing I think for me is when I place a trade, I place it because of a reason. I don't look at the market and say, this thing looks like it's going down, let's go short. Okay? Because if it doesn't go short, you're going to crucify yourself. Got to protect the grey matter, always. If you've made a decision to go with the market and it doesn't work, you know your decision was correct, the market didn't work with it. Done.
100%.
Yeah, then it's easy.
Sure. Wow. Yeah, you have certainly said so much today. My brain is, I'm still processing a lot of what you said. Yeah, so before we close off the interview, is there any advice you'd like to give to the guys out there, especially the novice traders?
Okay.
Yeah.
I think what the guys need to understand firstly is the brokerages that are involved. Brokers are there to make money. They're not there to help you make money. So choosing a broker is vital, absolutely vital. And then secondly is obtaining the correct knowledge. And by that I say, find somebody that is passionate, somebody that is prepared to work with you, not just pull you in, show you stuff, walk away. That you can go back to a person even at night, send a WhatsApp, say, listen, I'm stuck here, have you got time, help me out. And have a mentor that you can work with on the long term. Trading is not a game, guys. It's really a very, very lucrative business. But as I say, do it with the correct brokers and have a specific plan and know exactly what you want to obtain
with your money that you're going to be investing. And you don't need to start with a hell of a lot of money to actually make some good money out of it. So I think, watch this video and learn from it. And if there's any advice or help I can give, you're very welcome.
Yeah, you guys will be able to reach out to Richard. We're going to leave your social media details and your email down there, not your contact details.
I sent it through to the lady.
Yes.
But I don't do social media stuff or nothing.
We'll leave your email address down below.
The email's there and the website's there and so on.
That people can reach
and
out
then
to you.
the other thing is, obviously your people's reach is international as well. And for the international people, if you look at my website, you'll see that I've trained a guy in Bangkok, a South African guy, and I trained a pro tennis player from Switzerland.
Oh, nice.
Okay, so and that we did long distance. So if there are guys specifically in other countries, I'll first have an interview with them, and then I like to talk to people before we start. I just want to. I try and find out the depth of the person's commitment and his mental approach. Is he just going to go into it to try and make a quick buck, or does he really want to make a career change? Because trading is a career. It's an absolute career, True. And if I find the people, I had a guy in London. Those days I charged £3,000 for my courses, eh?
Wow.
Yeah. And I sat down with him. We had a chat. I said, "I'm not wasting my time because you're paying me well.
Yeah.
You're wasting your time." Yeah, but why? I said, "No, you're a gambler. You're going to be punting. That's all." And he said, "Don't you want my money?" I said, "Pay me. Then we go." And what happened was, this guy, I found out from one of the broking houses, he ended up there and he saw forex trading as gambling, Nqobile. Okay? Spending £40,000 a week.
Yeah.
A week. Very wealthy guy.
Okay.
Very, yeah.
So he had deep pockets.
He had deep pockets, and this was fun. He would look people, everybody says, yes, but if you look at that and the pound's going to go up, he just punts it. He just chucks it on there like a roulette table. Sure. And that's mocht getroffen. That's like and it doesn't work that way. If you want to lose your money, then you trade that way.
100%.
Guaranteed. I think this industry is the industry where you can make the fastest amount of money, but also lose it the fastest way. That's why you've got to be absolutely precise in what you're doing. And I'll be happy to help. If there's anybody that needs advice, let me know.
Perfect.
Good.
Now guys, you guys heard it for yourself. I am sitting here with Richard Stone. Thank you so much for just making time. I know you drove out from Pretoria side to come and be here today, guys. And guys, he did it for you guys. So guys, I hope you guys really do take something away from this, because what Richard said today, you said so many valuable things. I'm sitting here, I'm like, wow, okay, yeah, this is great. Yeah, and I'm so inspired right now. And thank you so much. I appreciate you just making time out of your day just to come and shoot this interview.
No problem. Thank you for inviting me. It's been an absolute pleasure. Absolute pleasure.
Alright guys, thank you so much for watching. My name is Nqobile Tembane from Top Traders, and we are shooting here at the AMPB Studios in Newtown, Johannesburg. And also don't forget, this is also sponsored by Excellence, so please use the link in the description to open up your accounts today. Thank you so much for watching, and see you in the next episode. Bye.
Excellent.
That was really beautiful.